welcome to this week's MFB News. I hope everybody's very, very well. I am back from Portugal. I want to say sunny Portugal, only I can't because for pretty much the whole time I was there, it rained. So, very nice city. I'm sure it would have been a lot nicer had the sun been out. Anyway, what have we got for you today? So we're going to do our usual update on what's been happening with swap rates and lender pricing changes. We're then going to talk about what's going to be happening with base rate in the coming months, taking a look at what various economists are saying about expectations for base rate there. We're going to have a look at what's going on with house prices, and then we're going to have a look at a report that the Mortgage Works has released, which is really super interesting, which is all about the changes that landlords are making to properties. And this could be green improvements, it could be extensions, conversions, that kind of stuff. And then what this is actually doing to rental yields. So for those of you who've maybe got a property which you're thinking, I can maybe make some changes to this and then drive up the income. It works, produces for me to sweat my asset a bit harder. Or actually I'm thinking about buying a property. If I were to make changes, if I spend this amount, what could this do to the yield that I get? This one could be really for you. Okay, now just before I really get stuck into this, I just want to say that my dog is sitting next to me, Otto the Schnoodle, and he's just had an operation, and so he's in quite a lot of pain. He's panting really heavily, and there's not a huge amount I can do about this. If you hear panting, there's nothing untoward going on, I can assure you. It's just my dog sitting right down by my side there, so apologies for that. Now, swap rates, first of all, what's been going on there? And not a huge amount of change since last week. 2-year swaps are at 3.52, 1 month ago 3.69, 1 year ago 4.19. So actually no real movement since last week, but actually comparatively to 1 month ago, they're sort of circa 0.17% lower, and 1 year ago around 0.6% lower. So still we were kind of ahead of the game there. And a similar story as always with 5 years. As of Tuesday evening, 5-year swaps were at 3.59, 1 month ago 3.77, and 1 year ago 3.97. So as I say, no real change week on week, but there has been a change if we look at, say, month on month. So what we are still seeing is some lenders bringing down their pricing. Again, not by huge amounts, but actually, you know, every little helps these days, isn't it? We're all feeling kind of fairly pinched at the moment. But yeah, so actually I think we're probably going to continue to see a few more lenders continue to bring down rates as they kind of react to the change in their cost of funds. But like I say, nothing is going to be massively sizable in terms of the changes that lenders are going to make unless something material changes with swap rates going forwards. Okay, now we have seen a few lenders make some reductions to rates, not a huge number and not making huge reductions, but still downward nonetheless. So TSB rates down by 0.05%, Zephyr Home Loans down by 0.1%, Coventry down by 0.1%. Those lenders, so TSB, very vanilla lender, don't want portfolio landlords, don't want limited companies, don't want HMOs, don't want multi-units, all that kind of stuff. Interestingly, I just recorded a Meet the Lender video, I don't know if you guys have been watching these, with TSB, and they have kind of alluded to the fact they may be looking to kind of ramp up their policy to open their doors to more borrowers. Could it be limited companies? Who knows? But actually a fairly narrow policy, but that doesn't mean that they can't serve a very large number of landlords, and their pricing is very good. Zephyr specialist lender, HMOs, multi-units, all that kind of stuff. Coventry we talk about often. So these guys are a high street lender up to 10 properties in the background, 15 if you're looking to use a limited company vehicle for the mortgage with them. Yeah, and very, very standard properties with the Coventry as well, so no multi-units, no HMOs. Now we have also seen in the last week, Foundation make some reductions to rates, and also the Family Building Society. Now these lenders, what they don't do is tell us how much they reduce their rates by. So without going through the whole product set and kind of aligning the old products with the new products and trying to figure out what the average reduction is, it would be really hard for me to give you an exact figure. I'm guessing with these guys, again, it's going to be circa 0.1%, nothing life-changing, but again, a downward step nonetheless. Now, last week, the Bank of England held base rate at 4%. So what's the future looking like in terms of future rate cuts? And I think let's just focus on December for this episode, because I think a lot of people are kind of very curious about what's going to happen in December. And essentially market analysts and market pricing are now seeing a 25 basis point cut. So base rate down to 3.75% in December is really likely. So for example, One note that I referenced when I was doing some research for this was the cut seems likely in December. Markets currently have the probability of a 25 basis point cut in base interest rates in December around 70%. So 70% odds on for a base rate reduction of 0.25% in December. Others, sort of major city brokers, including Morgan Stanley, Citigroup and UBS, are also expecting a cut in December after the November meeting, and this is now I'm citing here to you guys from Reuters. So some commentary suggests the Bank of England still remains data dependent, especially watching inflation, wage growth and the autumn budget. So we've got a lot of data to get through before the next base rate meeting, which is why I wouldn't be too kind of cocksure about this. But as it stands at the moment, definitely odds are very much on for a 25% reduction, sorry, 0.25% reduction in December. Now, in terms of what that means for fixed rates, the markets are already pricing this in, and that is why we've seen swap rates come down in the last couple of weeks. So when I was talking at the start of this episode and saying that compared to 1 month ago, swap rates have come down, that's what really is kind of influencing that factor. So for those of you who are going to do the thing which most people seem to do, which is say, well, okay, I'm not going to take a mortgage until I see what happens with base rate in December. Just know that that's absolutely fine if you want to do that. There's nothing wrong with that. But the reduction in base rate has already been priced in. So the meeting rolls around, base rate gets announced as going down by 0.25%. Invariably what happens is our phones start ringing saying, hi, have fixed rates come down now? No, because that price reduction was already priced in. The only thing that's going to materially change the pricing on that basis is going to be if, for example, base rate were to come down by 0.5%, so a bigger change than was priced in, that would materially change the pricing in the capital markets. Or actually, if base rate doesn't come down, that could actually alter things slightly, because obviously it's been kind of largely factored in that it will. So I hope that helps in terms of planning for the rest of the year. This is a busy time of year for people. I think a lot of people are kind of coming to the end of the year. They've got things they need to get done in terms of refinancing. Rates are coming to an end. They're looking at their kind of calendar thinking, crikey, Christmas is going to actually come around really fast now. So I've said the C word, it's out. We're going to talk about it every week from now on. Christmas is on its way. So I'm just going to try and get things done. So kind of November tends to be a very, very busy month. So for those of you who are kind of like, I really want to get on with this, but I need to wait for the base rate meeting, just know that actually probably, depending on what happens, but very, very likely, changing base rate by 0.25% downwards is not going to impact your fixed rates. So feel free to crack on now and get things tidied up so you can focus on Christmas. The latest Halifax house price index has been released, and it is showing a more positive view than probably the last time we talked about house prices, which I think was only like a week ago. You can never really keep up with these things. It's always changing. So the average house price rose by 0.6% month on month to £299,862 in October. And this is the fastest rate since January and a new record high. This is according to the Halifax price index, as I just mentioned. So it showed that the market returned to growth after a 0.3% fall in September. Further, the average values had risen in 4 of the last 5 months. So on an annual basis, the average house prices were 1.9% higher than a year earlier, and the rate of growth was up on September's 1.3%. So house prices are going in the right direction. However, we need to be mindful of the kind of regional differences here, because all that glitters is not necessarily gold, I'm afraid. So the Halifax data showed that Northern Ireland continued to be the nation with the strongest annual price growth, with values up by 8% compared to the 6.4% in the month previously. In Northern Ireland, the average house price there is £219,646. In Scotland, prices were up 4.4%. In Wales, there was a 2% uplift, but within England, it's much more granular. So the North East recorded the highest annual growth rate at 4.1%. bringing average values there to £180,924. But average prices fell in London and the South East by 0.3% and 0.1% respectively. So a chap called John Handford, who's the managing director at Fine & Country, which for those of you who aren't aware is an estate agent, said the figures were a clear sign that the market was stirring back to life after what has been a fairly steady year for house prices. He went on to say that the uptick reflects easing affordability pressures, stabilised mortgage costs and an underlying buyer confidence that remains intact. So essentially what we're saying here is that actually, despite the fact that the housing market has been relatively quiet, there's a lot of headwinds, actually because of mainly affordability changes, improvements and mortgage rates easing down, this has really supported the market, and therefore, in spite of everything, we are seeing house prices return to growth. Now, as I mentioned at the beginning, the Nationwide have released the Mortgage Works rather, who are part of the Nationwide, have released a report which really goes into detail about improvements that landlords are making to their properties, and as interestingly, maybe more so, how this impacts both the value of properties and the rents as well. So I thought I wanted to share this with you because, like I say, so many of you are kind of eyeballing green improvements for the MEES standards that are coming in 2027, but also a lot of you are kind of looking at how you can sweat your existing assets much harder to try to drive up values and rents, as well as looking at refurb projects. This is kind of going to cover a huge number of you, so very, very important and interesting. So first of all, starting off with the kind of overview of the report, and in terms of the main things that people are doing to properties, so kitchen and bathroom renovations are the most popular amongst buy-to-let investors who have made improvements over the last 5 years. Relatively small, quick wins there. 18% of landlords have made green improvements, such as adding solar panels or insulations. They're kind of the main things that people are up to at the moment. So going on to green improvements now, and just sort of having a look at what people are up to there. So as I mentioned, 1 in 5, so 18% of properties have had upgrades that benefited from green improvements. And of these, just over a third, so 37%, have had solar panels added. 33% of people improved the pipe and boiler insulation, and 32% installed an electric car charging point. Now, as Nationwide have explored on a previous report on the UK housing stock, solar panels are becoming a really popular feature on homes, with nearly 1.5 million homes in the UK now having those particular panels, which equates to nearly 6% of all dwellings, which is up from less than 3% in 2013. So these are certainly gaining a huge amount of popularity. Now, EV charging points are also becoming more widespread. 1.8 million homes in the UK now have access to an EV charging point, which is around 7% of stock, which is really fantastic. Now, in terms of bigger projects, not just kind of adding in a car charging point, but real kind of builds now, what are people up to? So 17% of privately rented properties had a multi-storey extension built over the last 5 years. 15% had a basement conversion. Now, interestingly, 2/3 or 68% of landlords said that some of the work undertaken was related to converting a property to a house of multiple occupation, and coming back to sweating our assets a little bit harder now. Across all landlords making renovations in the last 5 years, the average spend was around £88,000, although there are obviously significant variations. So what I mean by that is making an improvement by, changing the bathroom, £5,000 to £8,000, double story extension, massive. So that's what we're talking about in that point. Now, interestingly, and this is a bit that I think your ears will prick up at, nearly a third, so 32% of landlords who made improvements were able to increase the rent by more than 20% following the completion of the work. So this would be on your larger projects now, so conversions, adding actual kind of floor space to the property, but that's a massive uplift on the rents. So in terms of return on investment, adding a second bathroom to a buy-to-let property adds around 8% to its value. Adding a space to create an additional double bedroom can add 13% to the value of an existing 2-bedroom house. A loft conversion or extension incorporating a large double bedroom and bathroom can add as much as 24% to the value of a 3-bedroom, 1-bathroom house. So huge amounts of gains to be made there in terms of value adds. In terms of rents, adding an additional space to create an additional bedroom can add 12% to your rents. Meanwhile, a buy-to-let property with a second bathroom attracts a 6% rental premium. And finally, landlords undertaking a larger scale project, such as a loft conversion, could potentially see a rental uplift of up to 26% on their rent. So as we can see, actually lots of you are really kind of clearly taking action and making improvements to existing properties to kind of drive up value, drive up rents and make them greener as well, which is fantastic. For those of you who are thinking about it, I hope you found that useful. And that's me signing off for another week. It's going to be midway December next time we meet. I can't believe it. The year is just now running away at a terrific pace. As always, if you have any questions, please do give us a call, 0345 345 6788. Send us an email, have an online chat with us. You know the drill. You can reach us however is best suited to you. Have an amazing week. I hope it actually stops raining at some point for us, and I'll catch you next Wednesday.